Monday, September 26, 2022, Maneco 64, home of alternative economics and contrarian views. Big news today and overnight is that sterling is dropped to an all-time low, or 200-year low, if you want to call it that. And I've just seen that the gilt market has just opened, and that's getting hammered as well. So that's what we're going to look at today, currencies. And we're going to start with the GBPUSD, or the cable exchange rate. And why do they call it cable? Well, I think it's because the first telegraphic cable that was laid between Europe and North America was between London and New York. So they could trade the currencies through the telegraph. So they called it cable. Where's cable? And what I want to talk about is not just the exchange rate itself, but what an exchange rate meant. So, yeah, of course, the dollar, in terms of being the U.S. currency, has only been around, I guess, since 1792. And if you look at the term dollar, it was derived from the Spanish silver dollar. That was derived from the Joachim's Thaler coin. And the U.S. Congress adopted that name because those coins are very popular in the U.S. And they also, so it was a weight of silver, but they also made it into a weight of gold at a ratio of around, I think, just over 14, around 15 to 1. So if you look at this very long-term chart here of USD or GBPUSD or cable, and I took this from exchangerates.org.uk. They've got a good piece here on the history of this exchange rate. And you can see that throughout the 1900s, or sorry, 19th century, it was fixed just under 5. Yes, there was a huge spike here up to 10, where you could get $10 for a pound. That was during the Civil War, when the U.S. started printing greenbacks. Of course, that came back down afterwards. So why was the exchange rate around 488, I think, 480? Well, because currencies are supposed to be money, and money is supposed to be a fixed weight. It's honest weights and measures, right? We have measurements for weight, like kilo, pound, stone, measurements for length, like the inch, the yard, centimeter, miles, kilometers, for height as well, inches and feet and meters, and they're all fixed. They don't change the relationship, because if those relationships and measures change, the world would be a mess. And I would argue that the same thing is for money, and it's usually gold and silver, because they have been the most stable stores of value for thousands of years, and they are money. So I've got here a pound from 1860. What year is it again? I forgot. 1862. So it's a gold sovereign, but it's a pound. That's what it used to be, and it still is legally a pound. So there you go. And it's got it's a shield back, so it's a nice coin, and it's got Queen Victoria, of course. And that was in that period there, in the 19th century, where everything was fixed. Of course, this was during the Civil War, 1862. But I've got here as well one little gold dollar from 1853. So you can see, excuse me, you can see here how, yes, the gold content in the gold pound is almost 5 times the gold content in the dollar. And that's all the exchange rate was. And you can work the same thing out with the silver coins, but I thought it would be interesting to do with the gold coins. So what we've had, though, since World War I, As you can see here, when World War I started, Britain went off the gold standard. It tried to get back a few times there, as you can see, and then it gave up. And ever since World War II, we've been devaluing versus the dollar. The dollar, of course, stayed at 35 an ounce, troy ounce of gold until 1971. Prior to 1934, of course, it was $20.67. So we've been on this road to perdition, so to speak, for over 100 years, especially here in the UK. If you look at the period in the late 1700s and early 1800s, the pound dropped as well there. That was during the Napoleonic Wars. We went off gold. It was called the restriction period. But we went back, I think, in 1821, and things were very steady up until World War I. And unfortunately, things changed then. So, yes, we're hearing we made an all-time low, and we did. Even though the numbers are a little bit mixed. But according to this website here, exchangerates.org.uk, the low was made in 1985. So it was $1, 1.0520, and that was in the first quarter of 1985. I don't know if that's a quarterly number, because on barchart.com, I see that the low in February of 1985 was 103.45, and today apparently we touched 103.45. According to major news publications like the FT, and to them that is an all-time low. In my system, my IG platform, the low is 102.94. So I think we can safely say that this is an all-time low for the pound versus the dollar. And why do exchange rates fluctuate so much these days? Well, because they're not anchored to real money, gold and silver, and they haven't been anchored to each other, the fiat exchange rates, since 1973. So I wrote a series of articles back in 06, 07. It was only 2, I think, when I kept a blog called forsoundmoney.com. I don't have that anymore. But as you can see here, marketoracle.co.uk kept part 2 of that. And I was saying at the time that all currencies are sinking, all fiat currencies. Because believe it or not, the British pound is still one of the major reserve currencies, as you can see here. It's still number 4. Foreign countries hold almost 5% of their reserves in pounds. So, and the Japanese yen, as you can see, is in 3rd place. So what I think we're seeing, and it might not feel like it because the dollar is very strong, only because it's the major reserve currency, is the collapse of all these major reserve currencies. And the dollar will be last. The euro will be the one before last, even though it has been dropping a lot. And the only money, really, or currency that will finally collapse the dollar, the relationship will be against gold. So whenever you see gold taking off in dollars, that will be the dollar collapse. I don't know what exchange rate it will be, XAU USD, but I think we will know eventually. I don't know how long it's going to take. It could take months, a year or 2, maybe even a little more, but not more than 1 or 2, I have a feeling, because things are heating up in terms of the peripheral major reserve currencies, and that's what's happening. The UK hasn't really done anything too different than all the other countries, especially the US. We've been printing a lot of money. We've been deficit spending. We've been doing fiscal stimulus. The same thing that the US has been doing for years, and even before the current president. For example, in 2019, 2020, the budget deficit in the US was 5%. So it's not just in the last 2 years or so that the US has gone downhill. It's been going downhill, I would say, ever since 1971. And I'm going to put a link to a video that Money Week magazine did back in 2012 about the UK debt time bomb, that it was going to go off. And I think you really need to listen to that, because you're going to hear a lot of people blaming different things for what's happening now. But believe it or not, we need to go back as far as 1909, and you will see why. Well, I can tell you why, but watch the video. It's because it was the first time that UK taxes were used to redistribute income to the public. And what does that mean? Well, it was the first time that they set up a national pension for those who turned 70. But back then, the average life expectancy was about 48. So it's the equivalent of getting a pension today if you turned 115. So it was a politically good thing to do, and very cheap. It didn't cost much, because very few people ever lived to their 70. But what that did, it's put Britain on the road to a welfare state, which accelerated after World War II. And the rest of the world followed. And what we're seeing now is the collapse of this system, I think. And why? Well, because there's only so much that government can do for the people. And when we get to a point where the government becomes bigger than the private sector, you can't sustain the economies anymore. And I think that's what's going on. It's not going to be just the UK. It's going to be Europe. It's going to be the US and many, many other countries around the world. So that's what's going on. Yeah, a lot of people are going to blame Brexit or COVID. I think this would have happened no matter what. It could have been something else that triggered it. But the seeds were sown many, generations ago, actually, over 100 years ago. So with that, let's look at where things are this morning. It's 8:15 a.m. London time. So we've got spot gold. It's down about $2. It's at 1640. The low has been 25 and the high has been 47. And I'm going to show you an interesting chart of the price of gold in pounds, because we hit the all-time high, which is around 1580 overnight. And it's interesting. We've got like a triple top right now, but we've also broken out of this falling wedge or teacup handle, and I think we could go a lot higher eventually. It has come off a little bit here, XAU, GBP. So let's see where we are now. Well, that's not right anyway. Well, it says here's 1552, and just wanted to show you this chart as well. Back in '85, when sterling fell to 105 versus the dollar, gold was at 273 pounds, and now it's at above 1500. So it shows that gold is the winner here, even against the dollar. Let's get back to the markets. Spot silver is down 23 cents at 1862. The low has been 46, but we still haven't made a new low for the year. The low was below 18 a few weeks ago. High's been 1894. To the stock market, the Dow is down 71 points. S&P is down 11, and the Nasdaq 100 future is down 30 points. The FTSE is up 40 points. It's just above 7,000. Eurostoxx 50 is unchanged. So now to the currencies. Well, right now, cable or sterling is at 106.92, so it's rebounded. In my system, the low is 102.94, and the high is 108.58. So it's still down 1.5%. The euro is down, actually unchanged versus the dollar, 96.84. The dollar is up slightly versus the yen, or 1/3%, 143.80. And the dollar is up slightly versus the Swiss franc, 98.20. Dollar is up 0.3 versus the yuan at 7.15. And the dollar is up 1% versus the ruble at 58, but the ruble is still very strong, of course. To the other currencies here, Aussie dollar is down 1/4 at 665.13. Dollars unchanged versus the Canadian dollar, 135.96. And the Kiwi dollar is up. Kiwi dollar is down slightly at 57.37. We're going to look at the bond markets in a minute. Before that, we'll look at the general commodities. We're seeing the commodities drop sharply here. WTI crude is down 1% at 77.77. Brent is down 1.2% at 84.12. And high-grade copper is down 0.75% at 331.63. And U.S. nat gas is down slightly at 6.95. So yes, we're seeing a sell-off in everything. So it feels to me that we're seeing the liquidity move down Extra's pyramid, which I've spoken a lot about. But look at what's at the bottom of the pyramid. How long it will take to get there, the majority of the liquidity, or enough liquidity to stabilize the system, I don't know. So let's have a look at the gilt market, the UK government bond market. It's being sold off as well. Yields have been spiking massively. Right now, the 10-year yield is up 35 basis points, which is huge in one day. And we saw that already back on Friday. So we do have a sovereign debt collapse here, which actually, I don't want to brag about it. I forecasted back in August that we could see a sovereign debt crisis in the UK and a currency event. And I talked about how Franz Pick noted in his book here that currency crises seem to happen in the equinox. And believe it or not, 1931, the pound was devalued September 21st. 1992, you had the Soros pound crash. It was September 16th, just before the equinox. And now we've got this, September 23rd, Friday was the equinox. And the pound was already getting hit hard then, and it's continued to get hit hard. It's made a 200-year low. By the time this video is published, something might have happened. And what do I mean by something? Well, the Bank of England might have intervened and raised rates massively, or intervened. We'll have to see. But as of now, things don't look very good. But I think the pound is just the first domino. And I think the dollar is not far behind. So in the short end here of the UK gilt market, the 2-year gilt yield is up almost 50 basis points at almost 4.5. What this is going to do is going to quickly accelerate the recession in this country, unfortunately. And we're going to see the housing market come to a halt, I think. Not sure what prices are going to do. They probably move down a bit. And we're going to see, unfortunately, also higher unemployment. To the U.S. Treasury market or bond market, the 10-year yield is up 6 basis points at 3.75, and the 2-year is up 6 as well at 4.28. And just before we finish off, of course, in Italy, the far right, they call it the far right coalition won, and the 10-year Italian BTP or bond yield is up 8 basis points at 4.44. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. And think about subscribing to my channel if you haven't yet. And with that, I wish you all a great rest of the day. Take care. Bye.